The next guest is one of Italy's foremost industrialists and comes from one of the nation's most prominent business dynasties. Rodolfo De Benedetti is CEO of Compagnie Industriali Riunite, which was founded by his father Carlo back in 1976. Now, CIR is listed on the Milan Stock Exchange, has an annual revenue of almost 5 billion euros, and is active in finance, energy, healthcare, and autos. Well, it's perhaps best known for its media operations as the owner of the Espresso Group, which includes the newspaper La Repubblica. CIR recently made headlines of its own when it won a 560 million euro payout from Silvio Berlusconi's company, Fininvest. Now, court found Fininvest bribed a judge during a takeover battle for publisher Mondadori back in the 1990s. Well, I'm very pleased to say that Rodolfo De Benedetti joins us now in the studio. Thank you so much for joining us today. Now, it's very interesting. You're, of course, a prominent Italian businessman, and we're facing a lot of struggles for Italy in terms of a lot of investors are concerned that Italy is going to be the next Greece. If it's not the next Greece, it's going to be the next Portugal, certainly the next Spain. Are we in a real danger as a country, Italy, being put in the same basket as all these peripheral countries?
I think we are in a danger that emotionally the nervousness in the capital markets right now push Italy in that category. I think Italy is not in that category. I think there is a big difference between a large, sound, for most part, rich industrious economy like Italy, compared to some of the other countries that you've mentioned, which are nowhere near in terms of size and breadth and diversity of the economy. Clearly, it is a delicate juncture. Italy has some structural problems. Mainly, it's a very high debt load, which is the result of history. And therefore, I think we need to be particularly cautious and particularly focused on delivering a clear strategy of how we're going to manage that as a country to stay credible in the financial markets, where we have to roll our debt every month and for significant amounts. And so
talk to me a little bit about your overall business. We'll go into each specific unit shortly, but does it mean that you want to diversify a little bit away from Italy and trying to look for opportunities in emerging markets? Is this where growth is going to come from? Or because we risk a global recession, actually, it doesn't really make that much difference where you position yourself at this very moment?
The way we look at our businesses is really on a business-by-business basis. So, for example, our automotive component business, because of the nature of the auto industry, is already a global business. We realize less than 10% of our revenues in Italy. Most of our business is done in Europe. We have a big presence in Latin America. We have a small but growing presence in the US, and we have a growing presence in Asia. So that is clearly a business which is benefiting from globalization. We recently made a significant acquisition in that business. We bought a company which is partly European, partly American, which integrates with one of our two business divisions, which is the filtration business.
And so on the cars, are you targeting any other acquisitions? Because, of course, also with Fiat joining with Chrysler, it would make it possibly easier for you to look stateside.
We are actually benefiting from that tie-up because Chrysler was not a customer of ours before the Fiat tie-up, and we have been a supplier of Fiat for a long time, and Fiat is trying to develop more European-like vehicles for the US market, and therefore they're calling on their European suppliers to help them to develop models for the US market produced in the US. We're benefiting from that.
I just want to touch again on the car parts making part of your industry, because we spoke to Nouriel Rubini a little bit earlier on. He says there's a 60% chance now that the US will go into recession. Car makers are the worst performing industry groups in the month and actually in today's trading session as well. Are you concerned that actually if we are going to see a global slowdown or even double-dip recession, it's the car makers and therefore the car parts maker that will really be hurt?
Well, I think that certainly, the car business is a cyclical business, and I cannot say that we are not, as a supplier to that industry, exposed to the cycles. We've been in this business for 30 years, and we know that it is a cyclical business, and we are used to go through the ups and downs. We think we have a sufficiently diversified customer base and presence in various geographical markets, including a presence in the heavy-duty side of the business, which has a different cycle from the car part of the business. So we have been historically able to weather those cycles pretty well, but certainly we are bound to be affected by the cycle. So if there is a slowdown, and there is a slowdown in car production, we'll be impacted.
Is it difficult out there? I mean, in the last 5 months, you're saying that, of course, Italy is not Greece, it's not Portugal, but there's so many unknowns on the markets that your shareholders must be asking you difficult questions.
Definitely. I'm conscious about the fact that, and I see it in the meetings I have with our investors, the first question is, tell me about Italy, tell me about Europe, and what's going on. And I think the market is very confused, is very nervous. I think Italy is making the headlines, not for the good reasons recently, which is certainly challenging because some of those factors are totally outside of the control of anybody managing a business. I think, and I would hope that we don't waste this crisis. I think this crisis has the potential of forcing Italy to do the tough things that needs to be done, and with which I think the country could free the enormous potential and resources that it has inside, because of its entrepreneurial spirit, because of its tissue of small, medium-sized companies, which is very vital, which is export-oriented, and which could really benefit from sooner or later we're going to see a better economy. So my expectation and my hope is that we will soon define some measures which I think are necessary for the financial markets and for the rest of our European partners, that will be convincing, will be pro-growth, and will be mainly oriented on the cost cutting as opposed to raising taxes, which is in this environment I think is not the right thing to do.
But in the longer term, or actually in the shorter term, there's a little bit of concern about, of course, the ECB has been buying so many bonds in Italy to prop up and to get yields down. We now seem to be in a situation where we don't really know exactly what's going to happen with that. Does it make your financing costs a little bit more difficult? Because one of the problems with Italy is that you have small and medium-sized firms and you have bigger firms such as yourselves, and if they can't fund themselves, it's going to be a real problem. Have you looked at different options, or are you okay for the next couple of years?
We are in the fortunate position of having a very liquid balance sheet in CIR. We have significant cash reserves. We have no net debt. We have some gross debt which matures in 2024, so it's very far away. We don't have any closed maturities that we have to look at refinancing. So it's not an immediate cause of concern for us. Obviously, sooner or later, any company might have to refinance its existing debt, and if the conditions are like today, it's certainly going to be more expensive.
Now, behind you we have a wall with all your different divisions. In terms of media, a huge, media empire in Italy, but also in terms of healthcare, both have their own problems with government spending, and the other one with, of course, newspapers being more difficult to sell in general. Which one's going to be strongest over the next couple of years? What steps are you taking so that both of these divisions remain strong?
Yeah, as you said, we have a portfolio which is reasonably diversified, and that's the whole purpose. So, not have every egg in the same basket, and being exposed to cycles which are not simultaneous, and so we can compensate the ups and downs of different businesses. I think the media business, has been doing fairly well recently. We've been very successful in a major cost-cutting exercise that we overtook over the last couple of years. And this has enabled us to withstand a very bad advertising environment. The market is very soft right now. We expect it to continue to be soft, and so we will continue to push for efficiencies in that business and to develop the digital part, which is the future in our business.
All right, Mr. De Benedetti, thank you so much for joining us today.